Hello and welcome to this great conversation. My name is Chris Daines, an MHA Corporate International Tax Partner from London, and I'm joined with another Corporate International Tax Partner, Chris Denning, from our Thames Valley region. We're here to talk to you about yesterday's budget, what our initial thoughts were, what our current thinking is, following really delving into the detail, and provide some insights on what large corporates and multinationals should be thinking about. To be honest, my initial thoughts watching Rishi stand up yesterday is there wasn't a lot of material announcements from in relation to corporate tax and our impact internationally. But then we delved into the detail, and actually there's quite a bit of tinkering going on that we need to be thinking about. They obviously mentioned the annual investment allowance staying at the £1 million level up until March 2023, which will be helpful for a number of businesses. There was a lot in relation to key topics of interest in the current climate around sustainability, some tweaks around the plastic packaging tax on the horizon, and they snuck in effectively the cancellation of the cross-border group relief rules that are often known as the M&S claims immediately in effect. So there won't be that opportunity going forward that has been a benefit to various companies. Chris, what were your initial takeaways, and what's your current thinking in relation to the strength of the UK from a tax perspective and from an inward investment perspective off the back of yesterday and what we've seen over the last day or so?
Yeah, thanks, Chris. I think I agree with you. It was, I guess, quite a quiet budget certainly from a direct tax perspective, and I guess following the significant announcements in March, that probably was to be expected. The main one then being the increase in the CT rate to 25% from April 23. I also think that certainly from an international tax perspective, we've got the G20 summit this weekend, I think, where the OECD proposals around Pillar 1 and Pillar 2 are expected to be effectively ratified. So I guess things that weren't discussed in the speech, like DST, digital services tax, and maybe online sales taxes, that was probably to be expected. But as we know from last week, there was an announcement in respect of digital services taxes, which are effectively being withdrawn as the UK implements the Pillar 1 proposals in the future, albeit that in itself is quite an interesting situation given the de minimis limits that will apply to Pillar 2, which companies with turnover of 20 billion or more. So DST applied a lot lower levels than that. So as I say, I think from a policy perspective and from a legislative perspective, I think some of these things have probably been left off the table. Subject to finding out what's going to happen with, as I say, Pillar 1 and Pillar 2. That's not to say that there are a couple of things from an international perspective that I think were and are being introduced to effectively maintain and enhance the UK's position as a territory to invest in. There was an announcement around the possibility of re-domiciling companies to the UK, which I think the rules will be similar to the sort of SCE legislation that the EU has, but effectively it will enable companies to come to the UK and not have to effectively reincorporate. So they can come to the UK, they can take advantage of UK capital markets, professional services, etc., without actually having to go through an exercise. At the moment, it's quite a laborious exercise to actually re-domicile to the UK. So those rules, I think, will be welcomed. And the UK is also introducing a regime for qualifying asset holding companies, which I think is going to be similar to the sort of REIT regime, where it will enable structures to be effectively looked through as far as investors are concerned. And again, that's to attract fund management businesses to the UK. So there were a couple of things just on the edges, as you say, tweaks just to make the UK a bit more attractive.
Thanks, Chris. Yeah, there was a real mantra around levelling up, wasn't there? And actually, that applies equally to the potential online sales tax that there will be a consultation on, and any taxes raised will be directly helping businesses in relation to the rates they pay. So it's a real movement between, from advantage online to helping bricks and mortar. So it'll be interesting to see how that evolves. Thinking ahead and what was on the horizon, Rishi did sort of sneak in a very clever comment around, the Conservative Party being a lower tax ethos government, and that they hope by the end of their parliament they would be reducing certain taxes, but without much more detail there. Chris, what was your perspective on that, and what do you think we should be looking out over the coming years and future budget?
Yeah, I mean, I think a lot of people have picked up on that in terms of what that does mean, that the corporation tax rate will be reduced in 2023 as opposed to being maintained at 25%. I think in reality we don't know. I think all we can do is plan for what we do know. So from a multinational perspective, I think we have to plan, and our clients have to plan for the 25% tax rate. As I say, there are going to be significant changes as far as the international framework of taxation is concerned, following the Pillar 1 and Pillar 2 introduction. So again, I think there's going to be a lot for businesses to do around that. And as I say, I think if we get to a point where rates, at the end of the day, we're in a global competitive marketplace. We've got every government will need to raise tax revenues off the back of COVID. So whether we'll end up in this level playing field scenario that the international framework proposals are trying to get us to, will be interesting against the backdrop of individual countries having to raise tax revenues. So, at the end of the day, we need to maintain a competitiveness. And I've always believed that our headline rate is one of the things that stands out. Our nearest competitor is Ireland, whose rate will probably be around 15%. So, that's 10% lower than our rate. So, my personal view is that, we need to get back to a rate towards that level at some future point.
Absolutely. Let's hope the corporate tax headline rate does reduce at some point. Yeah, watch this space. So overall, not the kind of big corporate and international tax announcements like we had in the spring budget, but lots of things to be thinking about, and minor matters that have been tinkered with that we need to make sure the assessment's done and the impact on the business is taken care of. Thank you for listening. All the best and stay safe.
Thank you.